Asta, the other big one that's drawing our attention also because of one of its investors being Rakesh Jhunjhunwala's wife, Rekha Jhunjhunwala, who is backing Style Bazaar. This is an industry, this is a vertical, you have the likes of a Trend who's traded a significant premium. The comparison may not be fair, but it is on top of our minds for whatever it's worth. What is your view on Style Bazaar? Are you constructive on this one? What stands out for you on this? And what do you recommend investors should be doing?
So for Style Bazaar, again, the recommendation is subscribe. First of all, want to say that all these three IPOs are looking very strong to us. So subscribe to the Style Bazaar IPO also. Yes, again, they are into retail space. We all know that. And what is the major focus point for this company is their same-store sales growth is very strong and their margins are very strong when I compare them to V2 retail or V-Mart retail. So when I compare them, especially in FY24, the kind of margin this company has garnered, they are really very strong as compared to the other listed space peers. So that is major attraction for this company. And yes, I mean, if I talk about the valuation, maybe it looks on a little bit on the higher side. But if I compare it to the peers, I think the valuation of, because they are coming at a PE multiple of around 100. So when I see that valuation in the isolation, it may be looking to be on the higher side. But when I compare it to the peers, the valuations are not that very high. And the kind of store expansion companies doing, I think they will be going to get very strong results in their financial performance going ahead also. So we are positive on this IPO, and yes, the strong investor backing is also there. So that will be the major attraction for this IPO. So we are recommending subscribe for this IPO as well as that is Style Bazaar, both from the listing in as well as long-term perspective.
And from what I understand, Asta, of the 98 crores, of the fresh issue, 98 crores will go to finance existing debt, while 50 crores will be used for general proceeds. They've also raised 37 crores recently via the pre-IPO placement, which was again used to fund some of the loans. Do you feel like that's a little bit of a red flag? Because if you're raising money to repay debt, maybe a good thing because your cost of financing comes down, margins improve, and it gives you a little more bandwidth to sort of improve your debt equity ratio. But on the flip, if all of this money was going into expansion because this is a retail facing or consumer facing business, may have been a better option, you think? Or none of that worries you at this stage because it is a high growth business and relatively as compared to listed peers still looks attractive, and it plays a segment which is the urban rich, right? The new urban, which is at 4 lakh rupees per annum of income.
Yes. So yes, first of all, high growth business because the kind of CAGR growth they have posted in their top line from FY17 to FY24. So we have taken a huge track record of 6 to 7 years. Their CAGR growth in the top line is the highest among the peers. So high growth business. Now talking about your second point about the debt. Yes, they are going to repay the debt. And now what we are working out is the debt to equity ratio. Presently, it is standing somewhere at around 0.83. And after paying off the debt, it will come to 0.4. And in that, we have included the post-issue equity also. So from 0.8 to 0.4 debt to equity, debt will be reduced by the significant level. So I think that will also be the interesting point because the interest cost definitely will be adding benefit on the bottom line of the company. So I think yes, and most of the time, if any company wants to raise funds, it will be only for two purposes, majorly, either for the expansion or for the debt reduction. So they are going with that. So I think that is a beneficial point for the company going ahead, and that will help the company showing strong financial performance going ahead. So growth is very strong as compared to the peers. Debt reduction will help the company posting strong financial performance going ahead, backed by the strong investors. And now their plan is to expand at the national level because presently they are somewhat concentrated to some regional level. So I think that will all be helping the company in posting strong numbers going ahead. And that's why we are recommending subscribe to this IPO as well.
In fact, even in the grey market, it's trading at a massive premium to its upper band, I believe of about 141 rupees, which translates to about 37% of the upper end of the IPO price, which is very clearly indicating a positive sentiment for the IPO. Well, Asta, we talk about this every week when we chat. The quantum or the pool of money is limited. Options are so many, and of course, one is luck. But if you had to rank the IPOs in terms of preference, where is your bias? Can you rank them in 1, 2, 3, your top topmost preferred IPO to subscribe to and bottommost IPO to subscribe to?
Yes. So here I'm just saying from the perspective of the retail client, because what we are saying that we are recommending subscribe to all these three IPOs. But now we have to see whether the retail client can get the subscription also or not. So it depends on the size of issue. So looking after all the factors, that the size of the issue as well, the kind of the business model these companies are working into it, along with the financial performance, we are rating these three IPOs. So I'm giving number one rating to Premier Energies. There are 3 points. First of all, strong business model. Right now, government focus is also very high. So industry tailwind is there. Financial performance is excellent, reasonable valuation. And along with that, the size of an issue, because I have already told you that for retail investor, there the quota is at around 2 crore equity shares. So it is little bit higher if I compare to the rest of two IPOs. So the chances of allotment will be high if the number of shares putting for the subscription is high. So in that way also Premier Energies gets our number one ranking. So we are giving number one ranking to Premier Energies at IPO. Apply for this IPO in case if anyone has a limited fund, then Premier Energies IPO is a must subscribe from our side. Secondly, we are giving it to Ecos Mobility. Although Ecos Mobility and Style Bazaar, both of them hold the same sort of rankings. But if anyone has to go only for one out of these two, then one can put their money into the Ecos Mobility. Again, business model is good, as well as what we have seen as the valuations are also at the attractive levels. So second ranking can be given to the Ecos Mobility, and third comes Style Bazaar. But again, I want to mention, if anyone can put money in all these three IPOs, then it is the best choice, because all these three IPOs are must apply candidate. But in case of the limitation of funds, go with the Premier Energies at the top.
Could subscribe to all three. Would you go one third, one third, one third? So you'd split your money 33% across each IPO?
I think, see, if you are a retail investor, then 15,000 is the minimum amount which one needs to put in the money. So I think 15,000 to all these three IPOs will hardly take 50,000 of the total amount. So don't put any one third, just put 15,000 application, because there is no need to put the application for full 2 lakh rupees, because most of the retail investor, they usually do such sort of mistakes that they put the higher amount of application, just keeping in mind that we will get the allotment. No, minimum allotment will be there only. So there will be no difference whether you put 15,000 or 2 lakh. So it is better go with the 15,000 sum of money as the minimum lot of application, and put this money in all these three applications rather than distributing your funds.
Asta, I have one question, and I may have caught you off guard, and you can, not have to answer this. But there's another, we usually talk about main board listings, but there's an SME IPO called Indian Phosphate, which has again been subscribed 28 times on its last day, which is today. Do you have any coverage on this one?
No, Samina, we don't track SME IPOs because we ourselves are the merchant banker into the same space. So we don't track SME IPOs.
Yeah, conflict on that one. But thank you very much for taking the time out and helping our viewers decipher this IPO world, because it's too tough to take our eyes off this. In terms of ratings, Asta, of course, likes all three IPOs we discussed today, but a top rating goes to Premier Energies, followed by Ecos Mobility, and then Style Bazaar. With that, we wrap up this edition of the IPO show. Thanks for watching.